Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
The trouble with practical jokes is that very often they get elected. Every election is a sort of advance auction of stolen goods. You can always count on Americans to do the right thing after they've tried everything else. The whole problem with the world is that fools and fanatics are always so certain of themselves, and wiser people so full of doubts. It's easier to fool people than to convince them that they have been fooled.
Japan's bond market is starting to behave like a country discovering interest rates for the first time in 30 years, and it's not enjoying the experience. The 10-year JGB yield is surging towards 2.5%, while the 10-year forward yield has exploded above 4%. Even with the Bank of Japan still buying 3 trillion yen worth of bonds every month. That's a scary signal here. If yields are rising despite massive central bank support, investors may be losing faith in Japan's debt math altogether. Remember, Japan's debt to GDP is already at 250%. China now consumes 33% of all global electricity, one country using 1/3 of the planet's power. That's not an economy anymore, that's basically an extension code with a flag. The really big story is, however, India. Per capita electricity demand is just 1.4 megawatts per hour versus 7.5 in China and 13.1 in the US, which means India's growth story runway is enormous. Even getting halfway to China's level would require a mind-bending surge in power generation and grid infrastructure. And then comes AI. US data centers are set to devour huge amounts of electricity and natural gas over the next decade. Suddenly, utilities, pipelines, transformers, and power plants are becoming the new tech trade. Indian investors are buying gold ETFs like inflation just sent them a wedding invitation. Gold ETF assets under management exploded from $7.2 billion to $18.4 billion in just 1 year, a staggering 156% surge. Meanwhile, gold holdings jumped nearly 79%, crossing 116 tons. This is not just jewelry demand anymore. Investors are treating gold as portfolio insurance against global debt worries, geopolitical stress, and central banks printing money like they've discovered unlimited stationery. The fascinating part? Indians are increasingly buying gold without touching the gold. India added nearly 100 terawatt-hour of renewable electricity generation in 2025 alone, double the previous record. And here's the wild part. Solar by itself added more power than total renewable growth in any earlier year. To put that in perspective, this 1 year increase is roughly equal to the entire electricity consumption of countries like Bangladesh or the Philippines. India's energy story is no longer just coal versus renewables. It's becoming a full-scale electricity expansion to power factories, air conditioners, EVs, and eventually AI infrastructure for 1.4 billion people. India's share of global market cap has fallen from nearly 5% at the 2024 peak to just 3% now. That's a sharp reality check for a market that was once priced like GDP growth personally guaranteed by the universe. Part of it is a correction in Indian stocks, part the weaker rupee. And partly because markets like Taiwan and South Korea suddenly remembered semiconductors exist and went vertical. India's long-term story hasn't disappeared, but global investors are reminding everyone that great narratives still have valuation limits. India's merchandise trade deficit widened sharply to $28.38 billion in April, as imports jumped to a 6-month high of $71.94 billion, while exports came in at $43.56 billion. The real drama, oil and gas imports. The chart shows imports surging from roughly $12 billion in March to nearly $19 billion in April, a massive 1-month spike. Exports also rose from $5 billion to $10 billion, but not enough to stop the gap from widening. For FY26, cumulative merchandise imports touched nearly $775 billion versus exports of around $442 billion. Thankfully, India's services sector keeps bringing in roughly $37 billion a month, preventing the current account from looking like a leaking tanker.